we're going to move on to the market update from Mark Klompien. Thank you.
Good morning to you all, and greetings from the United States and from the United Potato Growers of America. I would certainly love to be there in person at the Canadian PEI meetings this week, but unfortunately have other commitments and other meetings going on, and so wasn't able to. I do certainly hope to get back there soon, and certainly greetings to all my friends in Canada at the United conference there. So what I want to do this morning is kind of go through a update from the U.S. side of the border on the 23-24 fresh potato market, and kind of take a look, as we usually do, at the 10-year varietal supply and price history, as well as taking a look at the market outlook for what may be to come for next crop year, or the crop that's going to be planted here before too long in the United States. In fact, some places in the Columbia Basin are already getting started to at least think about planting here within the next couple of weeks. I'll always start with kind of the yellow potato segment. One of the reasons I like to start there is because it's a real success story in terms of how this category has expanded and grown in market share as well as volume. And so it's really something that's kind of an anomaly within the fresh potato category, certainly here in the U.S. So first we'll take a look at how it kind of stacks up with total U.S. shipments versus the Canadian shipments that come into the U.S. or exported from Canada, from you folks up there. So this is a 10-year look at it, and on the bottom there you can see the Canadian shipments kind of in the pink color, and it's in this chart just based on a percentage basis. You can see it's really grown pretty significantly in terms of percentage of shipments. Even though the total U.S. segment has grown overall, the percentage of Canadian shipments into the U.S. in this category, the yellow category, has grown as well, even more so actually, up until this current year. Last year it was certainly record-setting. Over 20% of yellow potatoes in the U.S. marketplace came from north of the border. This year it's a different story, and I think there's probably a few reasons for that. It's still significant, still over 12%, but down from where it had been the last few years. And like I said, probably a couple of reasons for that. One, we're trying to keep an eye on this, and we'll do some further work on it, just exploring and making sure that the numbers being reported are accurate and correct and fitting in the right category. The other thing, we'll talk more about this when we get to the russet segment, is obviously this year the U.S. market has plenty of its own potatoes, and while that's more significant in the russet category, like I said, it's probably an issue kind of across the board in all fresh potatoes coming into the U.S. from Canada. So this shows it in a little different format. This is absolute numbers of total shipments into the U.S. from Canada. And again, you can see with putting a trend line on that, the growth that this category has experienced, not only here in the U.S., but also what's coming in from Canada over the last 10 years. We do see that drop off, like I mentioned from the previous slide. 1.3 million is what we're forecasting now. Again, we're going to keep track and keep an eye on those numbers to make sure they're being reported correctly. But again, given the significant increase in availability of potatoes, not necessarily reds and yellows, but certainly in the russet category, that availability in those channels where some of these potatoes might go has played a role probably in that decline as well. But again, you can see last year popping up there over 2 million, almost 2.2 million hundredweight shipped down from Canada. Very, very impressive. This is total U.S. yellow shipments just by itself, and it does include the Canadian shipments in those total numbers. And you can see we're going to hit a new record this year, 12.15 million. That's up a little bit, not a lot. It's continues the growth trend, although That's, it's pretty flat there from 12.05 million to 12.15. But it is a continuation of that growth trend that we've seen, with only one or two slight bobbles along the way in this really impressive growth trend. This is a yellow tracker that we use here. Those of you that follow our weekly conference calls or follow our podcasts are used to this chart. We look at the one on the podcast on a 7-week basis, but this is the tracker showing the full year to date for this current crop year for yellow potatoes. You can see that red line, which is this year's total by week, continues to be well above not only last year, but even more significantly above the 3-year average. So almost 10% over last year and almost 17% above the 3-year average. And just, again, very impressive growth rate. The other interesting thing is to see that big spike up in that Thanksgiving, the U.S. Thanksgiving holiday time period. Yellows at one time weren't that big of a role there. It was mostly a russet holiday, but that's really increased. You can see even the 3-year average is quite a bit below where the last couple of years have been in this category there in the Thanksgiving holiday window. So again, just something kind of interesting that we always kind of keep an eye on. This is a slide just to kind of summarize all the yellow potato data that we've kind of just been talking about. The 10-year annual growth rate in that chart I showed for yellow supplies in total is 6.1% per year. The growth rate over last year is actually about 1%. I think this is a slide from back in the Potato Business Summit. It's actually 1%, not 4%, at 12.15 that you saw on the first slide versus the 12.05 from last year. And along with this continued supply increase, really the impressive part of this has been the fact that there's a continued demand increase, and thereby pricing has remained strong. If you use the 10 5-pound bale price as a proxy for returns in the yellow market here in the U.S., it's up in that $17 range. And actually, this is a couple of weeks old, and it's probably a little bit above that even right now. So that's a good return, and that's a good thing to see that in this category, that even though we're experiencing growth, which sometimes would lead to a more of a depression in pricing, that has not been the case in the yellow segment. Proving to us that that demand increase continues to be there. And I've talked about this before. You've heard me say it, that there's no really single one of the differences between reds and russets and yellows is that in the yellow category, there's no single geographic region that dominates the yellow market. The large players you can see there, Idaho, actually surpassed California as the leading state supplier of yellows in the U.S. Kern County still a very large player, of course. San Luis Valley, the Red River Valley, North Dakota and Minnesota has continued to grow in their yellow output. They continue to convert some red production into yellow production, and that trend has been happening for a few years at least now. Canada, like you saw in those charts, actually, if it were a state as a yellow supplier into the U.S., it would be the third largest supply geographic region. And again, just the fact that market supply volume and the demand continues to stay strong in this category, which is just a very impressive thing. All right, let's shift gears to the red potato category now. And this is the similar look on the red side of things, with Canadian shipments shown in percentages down at the bottom of those total U.S. shipments. And you can see that this is a little bit of a different story, although Canada has, increased from some of those early years back in the mid 2010s to the, mid 15, 16, 17% range here a few years back, and it's continued to kind of be in that range of percentages, in that 15 to 17% range, I would say, over the last 3 or 4 years. And so currently this year we're expecting about 15.6% of our total red shipments within the U.S. to be coming from north of the border. Here it is again in a little more detailed fashion, more absolute numbers, and again putting a trend line on it. And 48,000 hundredweight per year is the average increase in that trend line, up to where it currently is projected now at about 1.65 million hundredweight. Kind of hit the peak a couple of years ago, just under 1.9 million. But again, there's been some puts and takes in the marketplace and what's been happening here on the U.S. side of the border. So some of that certainly impacts what happens in all of these fresh potato categories. This is what the U.S. Red shipments look like in total. Again, you can see a little bit of a bounce back in this current year in terms of total volume from 11.7 up to 12.3 million is our current forecast for this year. And this would be, again, a trend line would be in the downward direction over 10 years, although that's from when red category really hit its peak back in the mid 2010s. So if you looked at it more over the last 4 or 5 years, you would say that red supply situation has been relatively flat. Some of this is also influenced certainly by what happens in the Red River Valley and by Mother Nature up there. Most of actually all of the fresh red potato crop is grown on dry land, meaning no irrigation availability. So when you're dependent on Mother Nature for that and other things, it can be a little bit more of a wild card than some other areas that have more direct irrigation availability. So there are some puts and takes in this because of the vagaries of Mother Nature up there in the Red River Valley. But by and large, again, you can see just kind of a little bit more stabilization in this category over the last 4 or 5 years. This is the red tracker, and it does show an increase over last year, just like we just saw. It is down a little bit from the 3-year average, almost 3%. But again, this just kind of shows the puts and takes from week to week over the last 6 months, the first half really of this current marketing year of the current red potato crop. As a summary slide, again, the 10-year average annual growth rate in red supplies is actually a negative growth. It's a negative 2.7% per year. And some of the major shifts from last year include a somewhat significant increase in Idaho, which was kind of interesting, maybe a little bit unexpected, but there nonetheless. Kern County in California also had a somewhat significant increase. Some of the other major red areas, central Minnesota, that's the Big Lake area, the Red River Valley itself, the San Luis Valley, and Wisconsin were all pretty much flat. And by flat, it's kind of give or take 5 or 6%. We kind of call that in the flat part of the curve, so to speak. Florida was another large red producer, was actually down 14% last year. In Canada, we saw those numbers with the imports being down a little over, just a shade over 10%. And again, the red pricing has really kind of stabilized along with that supply, certainly more so than the market swings we saw 5, 6, or even 7 years ago. And, the current pricing, again, using this as a proxy for returns in the red market, the tote size A right now up in the Red River Valley is in that $20 range. I think it might be slightly higher than that, and probably directionally heading a little bit higher, given the situation in the red supply category right now. So that's a really good thing. Let's. Actually, before we get over to russets, I did want to show you this. It's just kind of an interesting trend of what's been happening between reds and yellows here in the U.S. We kind of saw this coming for a while. I've talked about it before, but the lines have now crossed between reds and yellows, where there's now more yellow supply in the marketplace, more yellow shipments than there are red shipments in the U.S. That happened last year. This year, you can call that almost equal with the recent change we made in that yellow projection. Reds are back slightly ahead, but give or take, that trend is probably expected to continue for a little while longer, and we'll see that continue to expand, that difference between having more yellows than reds in the marketplace. So just kind of an interesting little side note for that. All right, shifting gears to the russet category. Let's again look at kind of how many Canadian russet potatoes come down across the border. This is on a percentage basis, a much less number, much less volume than certainly the red and yellow category where you saw those numbers up in the high teens and even 20%. This has tended to trend down in the low single digits percentage wise. You see the spike up really the last 2 years before this current year, that 4.2% of the 21 crop, and then almost 7% of the 22 crop. The reason for that is, as you all know, I'm sure up there, is the fact that the U.S. had a very short and a very tight crop, and a lot of availability was just not there in certain markets, especially up in that northeast corridor where a lot of Prince Edward Island and New Brunswick potatoes come down. And so that made some availability for increased shipments from Canada, and certainly took advantage of that. This year, with the flip side happening in a very large crop in the U.S., especially out west, you can see that the projection that we're anticipating now is for that to be, or for the Canadian shipments of russets to be around 3% into the U.S. marketplace this current crop year. Again, looking at it in more absolute numbers with the trend line on it, you can see that that's really been a growth area for Canadian supplies coming down. It's almost 70,000 hundredweight a year on average. And again, hitting that spike last year and even the prior year at 2.6 million was very much at the time a record for shipments coming across the border, but all the way up over 4 million last year with the tightness of the supply situation here in the U.S. We're expecting that to drop back down to right close to 2 million for the current crop year that we're shipping in for the reasons and nature of things that we just talked about. This shows the U.S. fresh russet shipments on a 10-year basis. Again, it's no surprise to anyone that given what's happened in the marketplace, we have a lot more supply this year. And that 68.3 million is of course, a bounce back of almost 5.5 million or something in that ballpark. So anytime you put that many more potatoes out in the marketplace, you're going to have some dynamic shifts with that, and we've seen that. You can look at this and say, look, how come the sharpness of decline in returns, that 68 million is about where it was 3 or 4 or 5 years ago, and that is a good question. There have been some changes in the marketplace and some of the demand dynamics. The other thing to keep in mind is that when we look at this, it's for a marketing year, and our marketing year ends on August 1st here, and that's when we start a new crop marketing year. But in absolute terms, Idaho, quite honestly, is going to have one of the largest carryover numbers that it's probably seen in a long time. We're expecting at least 3 million sacks, maybe as much as 3.5 million sacks to be carried over past August 1st. So that's not reflected in this number. So the total crop shipments are actually probably well above 71, maybe even 72 million. And that puts it, that number quite a bit higher, and kind of explains some of the other dynamics that are going on in terms of pricing. So just kind of keep that in mind. But even this alone really points out the fact that, it all comes down to the supply and demand equation. And as I kind of break this down, I do want to show you kind of how in the U.S. What percentages come from each of the big 4 areas that we talk about. So when we talk about weighted GRI, these are the 4 big areas that we're looking at, and those are comprised of Idaho shipping 47% of the crop, and this is this current year. Actually, the last 2 years, Idaho was a little bit lower than that, down in the low to mid 40s, which was kind of interesting. But typically, Idaho's in that not quite 50%, but usually in the high 40s. And we see that this year. San Luis Valley is the next largest shipper, and you can see Wisconsin and the Columbia Basin there. So those 4 comprise typically well over 80%, between 80 and 85% of the total U.S. marketplace. You can see the sliver breakdown of some of the other areas, including Canada at that 3%, like we showed on that previous chart with Canada. So this just wanted to give you a lay of kind of the land of how the russet category breaks down within the U.S. geographically. And so then when we look at this is it's a little bit of a busy chart, but kind of stay with me here. So this is a shipment by week chart. Those bars are weekly shipments of total U.S. shipments for this current crop year. And the ones to the left in blue are actuals. Those are reported by AMS, USDA. And the ones going forward in kind of the orange color are the projected forecast shipments based on our supply and demand committee's projected total shipments in the U.S. And so you can see, and the other two things, the dotted blue line on the top is last year's shipment numbers, and the shaded background is the 5-year average. So you can see going forward that we have to be shipping pretty hard, well above last year and the 3-year average. And harder than we've shipped so far this year in terms of comparison to those other two time frames. And so that's going to come to play in the marketplace. We're already seeing an effect of continued downward pressure on the grower return index here in the U.S. Again, this is a weighted GRI based on those 4 major areas. But the other 2 lines that you see, that heavy dashed green line is the grower return index of all of last year, and the red dashed line is the grower return index for essentially year to date into early February for this year. And you can see what a difference a year makes and what a difference even small volume changes make in that return line. So that green line, again, it did jump back up after harvest and through the Thanksgiving window, and then kind of stabilized at just incredibly good levels for almost the entirely rest of the crop year, 22 to 23, almost $24 in some cases, just incredible. It started out the year in the early part of August at those levels and started to drop fairly quickly as it became apparent the size of the crop that was coming on, especially out west in the Columbia Basin, but most notably in Idaho. And that pressure has continued to be there all the way through harvest and through the holiday windows to where it is now probably slightly below $6.50 on the weighted grower return index. So I mentioned the fact that very small changes or relatively small changes in supply have a much larger effect on what happens in the grower return index side of things. So if we just do a very simple kind of equation here, the average 5-year russet supply from those previous charts I showed you is right around 66.8 million hundredweight per year. The average all-region weighted grower return index for that same time period is $12.46 a hundredweight. This year, the fresh market projected production, including the carryover and those kind of numbers, is around 71.5 million hundredweight, and the average all-region weighted grower return index for that same time period is 1084. But bear in mind that 1084 is somewhat heavily influenced by that. You saw that early window of that first 5 or 6 weeks of the year where the grower return index had not started to come down yet to its equilibrium for this year. And so it was still on a carryover from the very high levels that it saw the previous year. So you can say, you can see that, relatively small shift in the dynamics of the supply situation have a much larger impact on a percentage basis of what happens in the price side or the return side of that equation. And I decided to show this in a little different way this year. Sometimes I just show the ratio for those numbers, but I wanted to show you Idaho as an example. This is what we're calling the inelasticity ratio, and it shows the last 6 years of Idaho and kind of how this works. And you can see the 6-year average on the bottom being 8-to-1. That means for every 1% change in volume, on average, you would have an 8% change on the return side of the equation. Again, just noting that outsized impact that even small changes from year to year have on the return side of the equation. And it goes in both directions, by the way. So when there's a slight increase in supply, there's a much larger decrease in the return, and vice versa. When there's smaller changes in the downward direction in supply, it can have a very large positive impact on the pricing return side of the equation. You can see how it's kind of gone these last 6 years in both directions. Just picking out, the 2018 crop as an example, the shipment change from the prior year was only 2.5% increase, yet it had a 14.2% change in the GRI in the negative direction. The same was true last year in the or actually this year so far, year to date in the 2023 crop, 15.6 change increase in supply. That's had about a 55% decrease change in the return side of the equation. That's below that average of 8.1. It's only 4 to 1, and that's a good thing. If it was 8 to 1, that change in the GRI would be closer to 80%. And so seeing it smaller, that's good. That probably points to a couple things. Probably first and foremost, what's happening in the way of promotional activity and advertising and those kind of things to try to move this crop. Secondly, what some growers have done to try to divert potatoes to other directions, other uses. But at the same time, there's also been potatoes coming from the processing sector back into the fresh market as well. So that's kind of gone both directions. But again, this is really just points out the challenges that you have with having small changes in supply and much outsized changes in the price side of the equation. This shows it in a little bit different way. It's again, using Idaho as the example, it's really a scatter graph showing an inelasticity curve for the last 10 crop years. Each of those dots represents a crop year and the volume that was shipped for that crop year versus the average grower return index for that entire crop year. You can see that a lot of the years in the last 10 have been on the left or on the right side of that graph, and higher numbers. Up over 32.5 million. Last year was actually the last 2 years, but last year in particular, the big anomaly. We only shipped out of Idaho 26 million. And you can see what happened to the return, $22. And so a lot of questions were asked if growers would like to do that. Would you want to stay with that supply kind of a situation? The answer certainly should be yes, but you can see what happened and currently where we're at in the 23 crop, that highlighted number there. The grower return index year to date is a little over 9.5, and that's actually dropping. That'll drop further closer to that line curve. And bear in mind that the cost of production, I'm going to get to this in a minute, but is around $12.50 for Idaho. This just shows advertising and promotional activity in the U.S. And I show this chart. We say if you went into a store and had $1, how many pounds of each of these vegetable categories could you buy? And you can see a couple points to make here is that you can see that potatoes are near the top of the chart. So not only are they one of North America's most popular vegetables, certainly, but also one of the most affordable. And the other thing this points out is there's been a lot of promotional and advertising activity, which is a good thing to help try to move this crop, certainly. Let's spend a couple minutes just taking a quick look at the outlook for this coming year. This is alternative crop price changes. This is a model that Ben Eborn at North American Potato Market uses in conjunction with our model to help make a forecast for what the acreage might be next year. It uses the Idaho GRI, which is down 55%, especially versus wheat, which is also down. And you can see some of the changes mostly in the downward direction of some of the other alternative commodities. But this is some of the input that's used to kind of create that forecast. The other thing that goes into a grower's decision on production is things like cost of production for potatoes. And you can see the dramatic increase that we've seen over the last couple of years, going back to 2020, just the inflationary environment ever since then, all the way up to $12.62. It did flatten off a little bit this year with some of the fertilizer and chemical costs coming more into balance. But by and large, you're talking, 40% increase from where it was just 2 or 3 years ago. So when you talk about the overall outlook, certainly we have a weaker alternative crop pricing, but also a weaker Idaho GRI. We have cost of production increases moderating somewhat, but still very elevated from where they were just a couple of years ago. The processing situation continues to evolve. It's one of the biggest factors, honestly, last year that had an impact on excess acreage and excess production being on the market, and some of the rationalization that they had to do with that raw material. But that aside, you just continue to see demand increases and production capacity increases in that category. So there's other external market factors going on in the U.S., international market access, most notably Mexico. That's been a really good thing. Ag labor uncertainties. So what happens is the marketplace tends to return to the value of a crop at the volumes it was shipped in prior years when those changes are made. And so the model would suggest maybe a 2 to 3% decrease in acreage, which would be a good thing. But the question I always ask is it enough? And quite honestly, if it was only 2 or 3% from where we are right now and nothing else changes in terms of demand and the rest of the supply outlook in the processing sector, that would probably not be enough to get things back into equilibrium. And so hopefully there's other factors that will come to bear and other points that people will realize and understand and make those right decisions as we come into this next crop year. So with that, I will just thank you all very much for participating in this and watching from the U.S. side, and kind of an update there. And I hope to see you all again somewhere in person soon. And with that, I will close. Thank you all very much.